Thank you all so much for joining us at Bloomberg House Miami. Orlando, thank you for sitting down with me. Always a pleasure to see you in your hometown.
Dani, it is awesome to see you here in Miami.
I don't want to start with a therapy session, but I'm kind of going to start there.
I'm ready for that.
Okay,
we
good.
can do that.
Because
I'm good at that.
It's been a, let's say, strange start for the year for software, and I feel like probably every single question you've gotten in life is, how is AI affecting things? I just wondered that this period in your career, is it comparable to anything, or is like the stress, the anxiety that investors and markets are feeling very unique?
Oh, we've been through a lot. Remember, we're a product in software investing of the dot-com bubble burst. And what happened before and what happened after were incredible periods of hope, uncertainty, just everything everywhere. What we did back then was we focused on the details. At the beginning, people were saying this, and then when the dot-com bubble burst, I had people throw on my desk articles that said, software is dead, it's over. Don't do it anymore in 2021. So we've been through a lot of periods. The financial crisis was pretty crazy. We would see the bookings of our companies down 50%. I remember asking my mentor, Marcel Bernard, in the 70s, he ran many divisions of Motorola, best operator I've ever met. In the depths of the financial crisis, Marcel, how low can it get? And he said, it can go to zero. So we've been through a lot of periods. This one is really, really fun for us because we are learning so much, to be honest with you. You know, we have 100% of our time is in our day job. Find the money, find the deal, improve the deal, sell the deal. We meet with our companies every month from 8 to noon. They were just all here in our sessions of board meetings. We call it operating reviews. Extremely intense. That's 100% of our time. But now the other 100% that we've had to find over the weekends and late at night is learning all this. And how do we apply it to our business? And it's intense and it's really fun. If not, it gets boring.
It certainly does not sound boring. Sounds very busy. I wonder if in any of that, as you're learning, I mean, Orlando, you are always very candid in your strategy and when you've had to make changes. I remember we had a discussion a few years back when you decided to pivot away from crypto. You're always very honest on these things. I wonder if in this current landscape, you're adapting, but are you pivoting at all? Does the strategy need to change in any form as you think about a new world incorporating AI?
Not the strategy and the philosophy. Okay, what we are good at, our core competency, is our team is very, very good about investing in the highest quality assets that serve the enterprise in technology. And we're divided into all these domain teams. We have our fintech team, our healthcare software team, our identity cyber team, our network and firewall cyber team that have been with us for a very, very long time. So that's our one core competency that we do, I feel we do very, very well. The second one is we turn great innovators into great businesses. So innovators that are doing well, that are doing a great job for their customers, that are growing at rapid rates, they're usually not making money when we get them. So we need to make them into private equity fundamental investments that earn 40% margin, et cetera. So that kind of stays the same. The tactics of how you do it and what you focus on, they change about every 3 to 5 years. And they're changing wildly now. The main one is we have had to make our companies very, very quickly AI-centric companies.
Right.
And take some risk on that and invest a lot of money on that and experiment on that and move very, very quickly on it. And that's new.
That feels like almost an impossible task just given how quickly everything is changing. And I'd imagine it's hard to find the talent for that, just considering all this stuff. Yes, AI in some form has been around, but you can't find AI experts, I'm assuming, with decades of experience because this current iteration is so new. So how difficult is it to transform these companies and find the right people to do it?
You know what? What a great question. Since it's all new, you cannot talk to a person that has been doing AI for 25 years. Tell me how this stuff works, right? So you think about the talent, and the nice thing is software and AI are not two different worlds. They're not two separate communities of people where you have the AI people here and the software. They're all the same. They're all developers. They're all providing these solutions. They're building models. They're building software to make those models work. That's what agents are. So the way we look at it is we have 20,000 engineers across 77 companies. Those companies are worth about $300 billion. It's right underneath us. But it's been an incredible amount of work to identify the talent within that group, coordinate them, put them together, give them the right incentives and the right goals in order to move these companies forward.
Surely, though, they aren't all winners, and they can't all be winners. And just the elephant in the room, Orlando, is Medallia. And this obviously predates some of the AI scares. And again, here you've been very candid. You've talked about overpaying for it. There have been some discussions about lenders taking back the keys. Where do those discussions stand now?
I think they'll probably take back the keys. We are not interested in putting more money into the company because we have to be disciplined about that. We could do it, kick the can down the road another 5 years, pretend like it never happened, but we have a big fiduciary duty to our investors. And with that amount of money, we feel we can earn an exceptional rate of return, given what the markets are doing and what we're seeing in other things. But going back to Medallia, we do make mistakes. In every fund, we usually have one or two companies that don't do well. Mm-hmm. We take that so seriously. We actually end up spending more time on the companies that have issues than on the winners. For VCs, that doesn't make sense. But for us, we have this implied contract with our LPs that will try to save every single penny. I was on that deal. My partner, Scott Crable, was on that deal. We had the management committee on that deal for many years. Now, our investors have known about the issues of Medallia and the mistakes we made for 3 years now. It's been written down at a very, very low level for that time. And the beauty, one of my favorite things about the business is our partners, our investors. We've been together with them for 25 years, and they look at the totality of our luck and our mistakes together. And that's just a beautiful thing in our business.
What about on the lender side? Is there any frustration that perhaps they're not giving more leniency?
Same thing with the lenders. You know, the lenders we have on the deal are the best lenders. They're incredible lending partners. We just financed a deal for a company we have called Octane. After the market dropped and after there was this scare in private credit, we raised about $5 billion for the company in this new market from many of the same lenders. Now, we had to go really wide. We went to like 133 lenders. That's why we have a capital markets group.
Right.
But they also look at everything in its totality as well and have a lot of experience.
By the way, just on that, has the cost of capital changed for software companies? Are you having lenders, for example, charging more just because of some of the fears and the headline risk?
100%. Like the markets behave relatively efficiently. And if you look at the cost of debt, it's about 250 basis points wider than it was when there were no issues in the market or no perceived issues in the market.
Do you expect that to normalize, or is this a structural change?
You know, it's a little bit of what's going on with employment, with layoffs, with other things. It just got so cheap as well. You know, how do you discern it between perceived issues now or what could happen to companies versus the fact that it went as cheap as 350 basis points over SOFR? There was so much money, and there still is, in private credit, and so many private credit funds chasing these deals that the cost of capital was almost nothing.
So that was the part that was out of whack, not this current period. This is more normal.
Look, I think when you look at it and you look at the cost of credit now in a competitive market, the creditors are earning about a 9% yield, unlevered. You could say that's about right when the equity needs to earn 20% plus in a levered deal. It's not like it's crazy. It's certainly not near where it was in the financial crisis. There was no money then.
Right.
You could just not even get it.
Right. Just one last question on Medallia, because, you know, as you said, your investors knew about it for some time. They understood that you marked this down. It is quite a large hole if we're talking around $5 billion. How do you think about the rest of the portfolio and essentially saving that fund if it does take a big hit of that size?
Oh, we have some great winners in that fund. We have a much bigger investment than Medallia in Proofpoint. And when we bought that company, it had about $250 million in earnings. It's doing above $1 billion now, and it's absolutely crushing it. So we have enough going on in the portfolio to be able to bury some losses and some mistakes that we made. Now, when you look at our total check in the deal, that's not all us. We are less than 50%, of the total in that deal. So we also diversify. Now, the numbers are very large, but the percentages in each company in every fund have remained the same since 2000 when we had a $500 million fund.
Right. A funny thing has happened post-COVID that everybody was trying to say every company they were investing in, it's a cloud company, it's a software company. Everyone wanted to tout the tech exposure that they have. And now every earnings report from the big major public players, they're saying we have no software exposure or we have very little software exposure. You obviously know this industry better than anybody. Do you think these funds are being honest, or is there some kind of analog washing going on, that people are saying, this is a healthcare company, but maybe it actually is a software company? Do you think that the exposure out there is larger than most funds are willing to admit?
Oh, 100%. There's some gamesmanship around it, right? People are that have healthcare software companies, now they put it in the healthcare bucket. Or a fintech company, you put it in the financial bucket. Now, there's some games around with that, but it's also a true fact. Both can be true at the same time. At the end of the day, many industries are becoming software companies. And now with AI, they're becoming intelligent software companies. And when you invest in these spaces, you kind of move with the industry itself. I think what people are missing is the beauty about software and AI, and they will come together. They will be no difference between either in the next probably couple of years. But what people are missing is if you take any industry, any process, any function, over time, there's 2 to 3 technology companies that capture the entire knowledge of that industry, process, or function. And they see how operators in it make mistakes, how they do things right, how they innovate, and they put it all together in one place. And those players that collect 30 years of domain knowledge are so much more valuable than the industry around it. That was true 25 years ago when we discovered it and nobody would touch it in private equity. That is even more true today. Domain knowledge and that experience that's captured in these companies is worth so much money. Now here's a debate. Young AI companies will tell you that experience is garbage. Because now you can take a young person with access to these great models and they can find a better way. I don't believe in that. When you get down to the details of our companies, Coupa, a $1 billion company doing procurement, all the exceptions, how operators work in procurement, their challenges they have, you need a lot of experience on that. Dayforce, managing the payroll of union workers that get paid by the hour with union contracts all over the world, 100,000 employees, the knowledge that they have will run circles around this generalist stuff. Now, I also agree with the young generation experimenting because that's the beauty of technology. Maybe in some cases you can find a better way of doing things. Both can also be true, but that experience and domain, I think it's worth a lot of money.
In this world where AI and software become one and they become indistinguishable, what are the roles of the big LLMs? What is Anthropic, Google, who I know you have a partnership, what sort of does their enterprise-facing arm look like in this world where the lines start to become blurred?
That's evolving. Now, if you look at Amazon, Google, the hyperscalers, even to a certain extent Microsoft, even though they go up in that layer, they have learned from experience that they're going to be the infrastructure providers to these domains. They're going to go horizontal and capture the entire world, all the way from chips to the model. Now, who implements that and helps companies do that? It's these domain-specific people that have captured the whole knowledge of their domain that then go to a company and spend 9 months with them saying, what's your problem? How can I save you money? How's your infrastructure? How do you work? How are you organized? And then you adopt a general technology solution to that specific problem. Then you need to implement it. And then you need to make sure they're using it correctly, and then you need to serve them. And that is a tough business. You go deal by deal, and that's a real business. And that's what these players at the upper layer that we invest do very, very well. Now, there are some model companies that are saying, wow, that's really attractive. I'm going to form services businesses like OpenAI has announced and Anthropic has announced to go do custom projects for these Fortune 50 customers that can afford to spend $100 million, $200 million in a project. Will that work? Sure, that will also work. There are many custom solutions for companies. Accenture will do that. Other service firms will do that. No AI companies will do that. But also these incredible domain leaders, they probably will capture most of it.
That's really interesting. So basically the idea being, I'm trying to remember what the term is, but it's a type of engineer I know that maybe FDE, it's beyond my mind.
If you had FDE is a full-time equivalent.
Okay,
that's kind of what software calls it.
Okay, got it.
But if you change it to FDE,
okay,
forward deployed engineer,
I think this is the one
you can charge about 10 times for the same person.
Got it.
Okay,
So it's a marketing
we have a
ploy.
business. I see some people in technology here. That's exactly how it works.
Got it,
We now
okay.
have 20,000 FDEs in our portfolio.
I see. So, okay, so basically the idea that Anthropic is going to hire all these FDEs and they're going to go out to companies and they're going to replicate some of the software, you're saying that's only really sustainable for the big companies that can spend that. But elsewhere, it's going to be these software layer companies that are going to be the ones that go in and lead expertise. Is that the right interpretation?
I think that's a good generalization.
Okay.
Because once you do all the change management around how to use these agents and what you need to do, adapt it to the company, do these big projects, capture their ROI, measure the ROI, which is a really difficult part. Like discerning how much of the ROI is coming from an agent, but from the fact you did something super smart, operating-wise, is very difficult. By the time you do all that, when you leave, somebody has to maintain it. Somebody has to change the data around it. Somebody has to work with the library. Somebody has to work with an ever-evolving environment. And then you have cyber. Who decides whether an agent has access to what data can they use, what data can they change, who is directing them, how are they being directed? All that environment is new. Right now, there's going to be some messes around it, but also companies will figure it out. But if you get a medium-sized company to do all that, and many of you may be in the room, you're not in the business of doing this. You're in the business of beating your competitor at your business and what you do well. You worry about that every day. Take care of your customers. Who's competing against me? What's my price? Can I hire people? Can I retain people? Can I train them? That's your core. So a little bit of what's going on now is there's so much interest in AI as there should be, because it really will be transformative and it'll be good for the world. It'll be really, really, really good. And look how our lives are changing. I mean, we're going to have more people at Thoma Bravo. It's expanding, not less. The jobs of our junior people are getting much bigger instead of doing PowerPoint presentations and banging out a model for the 20th time. So it's going to be really, really good. But a lot of Silicon Valley is so in love with their robot and their technology that they think their customer will be just as in love with it. And you have to be really humble that they have a business to run, and this is about saving money for them, not doing projects for them.
Speaking of which, we only have a few minutes left, but I would love to discuss some more on your Google partnership, because it does feel like a lot of funds, private capital funds, are announcing various partnerships. What's the thought behind it, not just licensing something from one of these LLMs?
Well, we have a big partnership with the hyperscalers. That came from the software as a service days and has been growing. Google is the only company that has the entire stack, all the way to LLMs. And we have a great relationship with them, and they actually reached out to us and said, how can we work closer together? And we looked at it and we said, wait a minute, if we can get access to your FDEs,
how much are they charging you for that, Orlando?
Well, for us, no, it's a good partnership,
right,
because they monetize our relationship in a different way. If we can get access to this as we quickly transform our companies to become AI-centric, and by the way, the new bookings of our companies are about 40% AI-centric solutions. It's eliminating the labor that works with our system in these domains. It's a new market that just appeared on our lap from this infrastructure that's being built. So if we can leverage that, and if we can get early access to their models, that'll be extremely beneficial to us. And if they can get our business, and you know what they're smart about? They know that our domains will drag Google with them to penetrate enterprises.
I was going to say,
so that's the partnership.
There's an element where it's not necessarily that you need them, but this is something that they need. It's not efficient for them to go out into every single individual software company and to try to pitch them instead of coming to you. I mean, is that a fair assumption that they kind of need you in this if they're going to reach more enterprise clients?
100%. You cannot, it's like my mentor Marcel Bernard would say, which applies to some of the young companies. If you try to do it all, you'll get to none. One day you cannot be an expert in distribution, the other day manufacturing, the other day consumer, the other day payroll, the next day procurement. It doesn't, the world doesn't work that way. And they want to be horizontal and spread their AI knowledge and AI capabilities around the world. Partnering with these domain leaders is a great way for them to do that. Now, a great example of how we try to move very quickly is we got a call from them with an idea. And we moved our 77 companies And we were at Google with our biggest CEOs, the CEOs of our biggest companies, the following week on a Wednesday. And one of the heads of Google goes, do you guys usually work that fast? I go, actually, we do. Because it's all about leadership and what you focus on, and this stuff is really important.
I would have loved to have been a fly on the wall in those conversations. Next time, invite us. I'm sure you'd love media there.
That would be interesting.
One to think about. Orlando, we're out of time. Thank you so much for joining. This has been such a pleasure. Everyone, please join me in thanking Orlando Bravo.
Thank you.